Yesterday was Friday, the last trading day of the week, and I haven't taken a single position throughout Monday to Thursday. I'm at the gym, I'm looking at the charts, and I've jumped on for the New York PM session looking for a potential setup so I can make something on the week. The first trade I take, the first position of the day as well as the week, ends up hitting SL, minus $2,000 across two positions on the same trade. I then came back again, taking another position, catching a beautiful 1-to-14 risk to reward ratio trade, risking 0.5R. And that trade hits TP, making me $14,000, putting my PNL for the day at $12,000. I'm gonna give you guys a breakdown of both the loss and the win and show you how I use my gut instinct and my intuition to catch this $14,000 move. When I say intuition, I don't mean I gambled. It's just that I've been doing this for such a long time that I kind of know and I can anticipate when reversals are going to come. I don't always get it right, but when I do get it right, they can be massively rewarding. And because of this, I managed to get better entries, but still taking profit at what would have been a 1-to-2 risk to reward ratio if I had entered based on my mechanical strategy. So all in all, this is really interesting how this plays out. I've done this multiple times. It's not something you can actually teach, but I'm gonna go through it anyway, and hopefully you guys can get it, alright? So this right here is the chart. These are the trades that I took yesterday. One right here was the loss of $2,000, and this right here was a TP, a 1-to-14 risk to reward ratio, making me $14,000, risking 0.5% on my 200k Titan Capital Markets account, meaning I risked $1,000 to make $14,000 back. So let's replay the charts to just after the New York lunch hour, and let's go ahead and see what the market was doing and my thought process throughout the New York PM session whilst I was at the gym. Now I'm on the 15-minute time frame, and as a lot of you guys know, my strategy for the New York PM session is pretty simple. All I'm doing is marking out the AM session high, the AM session low, the lunch session high or the lunch session low. I'm waiting for a sweep of one of those highs or lows. Then I'm gonna go drop down to the lower time frame, look for a market structure shift with displacement, fair value gap, entries at the fair value gap, stop losses at the high, and take profit is always at a 1-to-2 risk to reward ratio. And that is my strategy for the New York PM session, and that's what I've been doing for the last 2-3 years. So yesterday, Friday, as you can see, we've had the AM session low already get swept during the lunch hour. We now have a lunch hour low right here, but we also have a previous day low right there. 2 points of liquidity where we could potentially see some sort of reversal from. So I went ahead and marked out my lunch hour low, and I also went ahead and marked out my previous day low right here. So I was anticipating that the market would do something like this. Take out the lunch low, take out the previous day low, go ahead and give me my lower time frame confluences, and then push towards the upside towards one of these 15-minute fair value gaps. Instead, what did the market do? The market just kept on pushing towards the upside. So obviously this setup that I anticipated was not going to happen. Cool. What do we have next? We have had this AM session high right here getting swept. So AM session high got swept, and if you go into the 1 hour time frame, we also tapped into this 1 hour fair value gap right here. I've got AM session high getting swept. I've got a 1 hour fair value gap. So obviously I'm now anticipating sales from this 1 hour fair value gap. Again, the New York PM session strategy doesn't require a daily bias. It doesn't require you to have a higher time frame narrative. We're simply using the AM session as a reference to figure out the direction of the PM session. So now once the AM session high has been swept and we've tapped into this 1 hour fair value gap, I dropped down to the 1 minute time frame, and I was anticipating that the market would go ahead and start dumping toward the downside. Now since I'm already anticipating this and we've tapped into this fair value gap, we've also had the market wick out these areas right here with this massive wick right here. So I went ahead and entered literally right here, giving my trade some room to breathe and putting my take profit at 1-to-2 risk to reward ratio. I then saw that the market went ahead and inverted this fair value gap right here. So because we had an inversion right there, I was now more confident that this trade would go ahead and hit my take profit. So I left my stop loss where it was, and I went ahead and entered a second position at this fair value gap with my stop loss at this wick high right here, taking profit at 1-to-2 risk to reward ratio. Me just scaling into my previous position because I've got a valid confluence to tell me that cool, we're going to be pushing toward the downside. And as you can see, both of these positions ended up hitting stop loss. This trade did not go through. One position I lost 1,500, the second position I lost $500. So that trade right there hit stop loss. Cool. We then had the market push further towards the upside, and if you go back and check the 1 hour time frame, we've got another fair value gap that we just tapped into right here. So now I'm anticipating that the market will go ahead and react off of this 1 hour fair value gap, dropping back down to the 1 minute time frame. As you guys can see, the market tapped into this 1 hour fair value gap, and then it gave us an inversion right here. So this in itself was the first indication that cool, we're going to start seeing some potential downside price movement. After we had this inversion fair value gap, we went ahead and tapped back into this order block, but we didn't manage to break this low right here, giving us a market structure shift. That would have been an added confluence, but this inversion fair value gap is a confluence that we can potentially use. Now we tapped into this order block, we failed to break this high right here, so that in itself tells me that we are creating liquidity for the buy side of the curve. So when it comes to taking buys, this is where the market's going to target. But as of right now, we're not going to break this high. So from here, I went ahead and entered a short position literally after this candle close with my stop loss literally just around here, and my take profit was more or less these lows right here. This is where I was targeting, because literally below it, if you look at the 15-minute, you've got a 15-minute fair value gap right here. So this is where I'm anticipating the market will go ahead and reach. This is my point of liquidity before we see maybe a potential reversal. Back on the 1 minute time frame, I went ahead and entered right there with my stops just above the high, and my take profit was at this low right here. And altogether, I risked 0.5% on my 200k live funded account with Titan Capital Markets, $1,000, to make back $14,000, taking my TP right here. I also wanted to potentially go in for a scaling right here, because we did in fact have our market structure shift afterwards. We had our displacement, we had our fair value gap, everything that we needed. But unfortunately, the market didn't tap me into my second position, so I could have made more than 14,000, but I didn't get tapped in, hence I didn't make more than 14,000. I did in fact call both trades out in my mental markup section on my Discord. As you can see, this is the first trade right here. It ended up hitting stop loss, and I also called out the second trade, but I didn't give the same entry that I took. Instead, I gave a breaker block entry because I didn't want people to take the same risk that I was willing to take, risking 0.5 or 0.5% of the account. So I gave a safer entry with a safer stop loss and a safer take profit, just so these guys could keep the psychology in check. And although my TP did get hit, making me $14,000, this trade didn't hit TP before market close. But if you closed before the market closed, you would have at least made back the loss that you took in the previous trade and a bit of profit as well. But anyways, that was the trade. These are the results from the trade themselves. As you can see right here, this right here is the result from the $14,000 trade. $14,000 made in 27 minutes. That put my Titan Capital Markets 200k funded account up $9,000 because the account was in drawdown. And today I did request my payout with Titan Capital Markets, so hopefully I'll get that within the next 2-3 days. I hope you guys understand how I use my gut instinct plus my intuition paired with confluences within the market to make the profit that I made yesterday, as well as similar profit that I've made on other days, such as last week. Just before I went to Dubai, I did something similar where I made like $12,000. But anyways, I hope you guys learned something. I hope you guys found some value. Make sure you like and subscribe before you go, and I'll see you guys on the charts.